Hey traders, welcome back to Smurf Trading again. So today I'm giving you an update of this whole overall 200k FTMO challenge and diving into what has been happening lately. So let's cut to the chase. So it has been a rough week. So this is my FTMO dashboard, as you can see over here. And as you can see, the balance has retraced from the 16k profit all the way to approximately like 4k profit or so. So we have hit a serious drawdown. And out of the 19 trades, right, only 3 were winners and the rest are losers. That's right, we had 16 losing straight, including this consecutive 4 losing trade right now. But here's the thing is, this is all within our expectation. So let me have a look at this calendar views to have a better glimpse of what exactly happened to our FTMO account. So for the first week, we hit into the 14k up move, and that is when for the next 2 weeks, including today, the second week today, we had some drawdowns. So this in mind is all within our expectation because our average win rate is around 40%, and if we were to use some losing streak calculator as seen over here, with a 40% winning rate, is expected to have approximately 9 losing streak for every 100 sample size. So this is not something that is I did not expect. The main thing is how are we going to manage our account, manage our risk as and when such thing were to happen. So going back to this. Okay, let's look at this view to have a better glimpse of what really happened. So currently we are at a drawdown of as of end of yesterday, Monday, today, we have a drawdown of 3.92% from the highest day balance, closing day balance, which is 213,000. So our starting balance for today was 204,000. That's a 3.9% drawdown. So with this in mind, the rule that we set for ourselves is to actually reduce our risk to 0.25%. That is what we did today. Okay, so here's the important part. A lot of traders, right, would panic at this point. But this is where the difference between a good trader and a mediocre trader shows up. It's not about how much you earn a month. Probably maybe in the month of September this week, you earn like 14k. But the next few weeks, if you don't know how to manage your risk, don't know how to stick to your rules and manage your risk lower and aim for the better A plus setup, that is when there's a very good chance that you might bust your account eventually. So it's all about handling the drawdown. It's about protecting your capital and staying in the game, right? Staying in the game long enough to let your edge play out in the long run. So we are sizing out the 0.25%. Okay, hold on a moment. Now we have an alarm right now. This alarm is more like an A plus setup that's incoming at this moment. So what happened was, every Tuesday there's this setup that is A plus as long as there's an Asia sweep, there's a fair value gap, and based on my data, over the past quarter, this yield one of the highest winning rate. Not say winning rate per se, this of risk reward expectancy is one of the highest. So this is up to you whether you want to take the trade with me. The first attempt we traded here, the first attempt was a B setup and we lost, and based on the strategy over here, now we have an A plus setup, and that's where we will leverage on this move over here. Let me just give you a 15 minutes view of what is going on. So what happened is this. In the Asia zone, we created this Asia high, Asia low, and Asia actually swept the high and continued upwards. So what happened is we have to hit into a structure that shows there's a higher chance, which is, for this case, is a 1 hour SMA 44. And this is an extra confluence for us to have A plus setup. I actually trade a B setup that actually lost the first trade, but now we are in an A plus setup whereby if there were to be a fair value gap over here, we will take the trade. If there's a fair value gap over here, right? The moment 5 minutes candle close over here and retrace back to here, we will do a trade. But let's get back to our main topic because we are still waiting for the trade to materialize. So back to this topic over here. So I say, as long as you want to stay in a game, want to let your age play out, you have to stay in the game as long as possible. So to help me stay on course, aside from all these risk management that I have existing, we have 5 rules that we have to follow strictly. So 5 rules, depending on your experience, and for those of you that are watching the video right now and are actually experienced drawdown like me, hopefully these rules will help you along your way. So the first rule I had for myself is this: 3 bullets per day. Okay, so keep trading. If as long as I'm not down 3 bullets. What do I mean by this? So meaning to say, if my default risk is 0.5%, if I were to lose 0.5%, right? 0.5%, second trade lose 0.5%, and the third trade I won 1%, right? But the next few trades I keep losing until I have a net down of 3R. Net down of 3R is what we mean. So for this case, right, since 0.5% is my 1R trade, as long as I'm net down by minus 1.5% for the day, I have stopped trading. So meaning to say, at this point of time, okay, I will keep trading until this trade. So trade number 1, 2, 3, 4, 5. Because at the 6th trade, because although I won 1, I lost 5 trades. My net down R is minus 1.5%. That is equivalent to minus 3R. That is when we will stop trading for the day. So the rule is, as long as you keep trading, as long as you are not down by 3 bullets. The moment you're down by 3 bullets, I have to stop trading. This is something that I will stick to the plan going forward. Okay, let me have a look at this. If let's say this is materializing, I will do some trade setup. Hold on. Okay. I saw a trade setup materializing for this. There's a valid fair value gap. That's when I set an entry order over here. Okay, so I actually enter a trade right at this moment, right? Stop loss probably is just slightly above the swing high level, plus some buffer. So I'm going to add some buffer for 7.7. So whatever the trade goes, I'm okay with the result because I stick to my plan, and this is part of a setup that has been backtested for quite a period of time with proven results. and let's see how it goes. So the winning rate though is merely 50%. What happened is we actually risking 1 unit for more than 2 units of gain. So we actually enter here. Alright, we just enter here, and we are going to have a risk management of securing 20% at 1.4R and the rest at 2.5R. So our target is 41.22. Let me just give me a moment while I adjust my take profit area. Okay, that is approximately 376 micropip. 376 micropip. And this is approximately 38.22. So what happened is our major take profit zone is 38.22. So now we will just let it run regardless of the result. I don't really care, because as long as it's within our setup parameter with a edge in play, we let it run out of 10 trades. That's how we trade. So next thing is, the first rule is 3 bullets per day. The next rule that we have to follow, right, is the drawdown rule. What I mean by drawdown rule is this. Let me just write down. Drawdown rule kicks in after 3 are up, and I will stop trading once I give back 50%. Stop trading once I give back 50% of my winnings. So what do I mean by this? Using the same example over here, let's say the first trade, every trade, right, we risk 0.5%. Let me show here so it's clearer over here. So the first trade we actually lost. Let's say the first trade we lost minus 0.5%. Okay. Second trade we also lost, but subsequently few trades we hit in the 2R, 4R, 5R trade setup, and we actually up by maybe 1.5%. 1.5% for the third trade, another up by 1.5% for the fourth trade. So at this moment, you notice that the total up for the day is 2%. 2%, right? 2% is equivalent to a 4R up. So what happened is, once we, after the fourth trade, right, first, second, third, fourth trade, where we are up the net 2%, we will stick to this drawdown rule, whereby the moment the next trade, if we were to hit anywhere that lose out at least 50% of our profit, which means is approximately 1%. Let's say the next 2 trade we lost 0.5, 0.5. That is when we stop for the day, because at this moment we have given back 50% of our winnings. So 50% of this whole 2% over here is 1%. So the next 2 trade, if we accumulate 1% of loss, we will stop trading for the day. So this actually protects us in a way that we will secure some profit for the day regardless of how the condition it is. And it also avoid you having this thought of revenge trading. So what happened is, most traders, when they are up several R for the day, probably they're already up like 20-30%, like they have this insane push whereby they capitalize a strong profit. The moment they give back like 80% of the profit, that is when they reach the point whereby their psychology will take some hit, their psychology will be affected because they realize, oh, I lost nearly 80% of my profit. I want to chase back. So when you have this chasing back FOMO mentality, chances are you will get yourself into a lot of unfavorable setup, a lot of B setup that's not A+. You keep going for those setup that's very mediocre, and that's where you lose out most of your winnings. So the reason why I stick to 50%, because this is the buffer whereby most traders, especially for me, if I were to give back 50%, I'm still okay, and I don't have this, it won't trigger me to the extent of reverse trading and getting myself in unfavorable conditions to trade bad trades. So this is more like a protection mechanism for myself, because you have to be aware that no traders, no people, no one is perfect, whereby you are saying that you're going to trade like a robot. No, you succumb to emotions, you succumb to psychological barrier whereby you will do things that in hindsight, you look back at whatever you do, you'll notice that you're doing it wrong. But at the moment, you won't be able to see it. So that is why we have to have rules to keep ourselves in check, emotions in check. So in long run, we'll reduce our mistakes in the very long run. In the long run, whereby we will let our edge play out. So this is rule number 2. So rule number 3 over here is, okay, actually rule number 3 is very much similar to rule number 1 and 2, which means it's no new entries, okay, if close to max 3R loss. This is just to reiterate how we actually manage this. Like, let's say you have the first trade is a loss, 0.5%, right? The second trade haven't materialized yet, but you have open trades. Okay, open trades that is that is running, right? And this open trade that's running, right, have a max loss of same 0.5%, right? But you don't know the outcome yet. That is when you don't open new trades. You have to let your 3 trades materialize first before you enter new trades. Even if there is a very nice setup, you don't open for the 4th trade, because you have don't open up your risk to more than the rule of 3 bullets per day. So this is what is this all about, the third rule. No new entries if close to max 3R loss. The 4th rule is just talking about no move is better than a wrong move. What do I mean by this? In short, it is to stick to your plan. Sometimes, in a given day, even you are looking at the monitor for the past 5-6 hours, right? If there's no decent setups, there's no setups that is based on a rule, just don't trade. Because there are traders out there that actually have this psychology dilemma, psychology kind of weakness, whereby they tell themselves, if I'm at the computer for 4-5 hours, I must enter at least 1 trade. This is actually very dangerous, because if you have this mentality that you have been spending for many hours in front of the computer, I must enter a trade, you reach a point whereby you will enter a lot of mediocre setups, B setup, C setup that is not good in the long run. So you have to tell yourself this: no move is better than wrong move. Sorry, I should write is. It's not if. It's better than wrong move. So it's better to don't trade if you don't see any favorable setup that's based on your rule. Okay, the last rule over here is a bit counterintuitive, and it's not most traders will say. So all the rules I say so far, right, 1, 2, 3, 4, they will be override, they will be uh, they will be surpassed by rule number 5. So rule number 5 take precedence, take priority. So rule number 5 is this. Listen carefully. A plus setups get special treatment. So what do I mean by this? Regardless of point number 1, number 2, and number 3, I will continue to trade the A plus setup based on data, backtesting. I know the probability and whatsoever. I will continue to trade the A plus setup as long as, right? As long as my daily drawdown, okay, as long as my daily drawdown is less than 7k. So depending on your buffer, for my case, if you look at FTM website over here, my total permitted loss is actually 10k per month, 10k per day, meaning to say I will limit myself to the 70% mark. So the moment is my loss is 6.9k, I will still trade the A plus setup that's available. But if my loss is already 7.1k, regardless of what, I will stop trading. I will stop any trading for the day. So this is a protection for me, because the moment I hit 10k, I will bust, I will lose the challenge. So this is a protection that I hope most of you will follow. So A plus setup gets special treatment. Why is that so? So the main reason is because such setups are proven to worth more and deserve extra attention. Pardon my throat because I'm having a bad flu and sore throat. The reason why there is this obsession to allow myself to only trade these A plus category trades is because based on data, right, we know such setup doesn't come by frequently. They are actually quite rare, and if we were to stick to all the conditions and trade accordingly, it has an average of at least 65% win rate with over 3R per setup, and this is extremely profitable. So let's briefly look at some of my strategies that I have over here, that I have for my own setup. In total, I have 11 strategy. Only 3 setups are considered A plus, right? They do not occur frequently, and they are quite rare. And if it happened, the hit rate is high, and we are risking small to win big in the long run. So for example, let me just show you BRS1 setup, right, has a winning rate of 68%, and if we were to win, we win up to 3.7R. Alright, BRS3 has a winning rate of 80%, and if we were to win, we win up to 2.6R per trade. So same for New York Z style trade, the win rate is 67%, and every time when we were to win, it win 2.9R. So the main thing about A plus setup is not all is A plus setup. The main thing is proven by data. You have to backtest it, right, with sample size exceeding over 10 plus set of trades with over a course of 3 months plus. The reason why this time base of 3 months plus is very important is because it allows yourself to run a test through different market conditions, including trending market, including sideways structure market. So with this longer period of time, it will be tested over a longer course of consistency, and we know it will play out in the long run. And the second criteria is the win rate need to be 65% and above to lower the losing streak probability. So what I mean by this is, why 65% is because using this losing streak calculator, we have given size of 100 sample, right? At 65%, the losing streak is actually reduced to 4. Instead of, let's say the win rate is only 40%, which is my current style of trading, whereby I just try strats that are around 40%, 50%. right? I will occasionally encounter a losing streak of 9 trades for every 100 trades that are taken. So this is somewhat of a protecting yourself in the long run. And the last criteria is over this. Must be 1R plus per trade. 1R plus per trade is if you were to extrapolate over 100 trade setup, including the wins and loss, it means that every time you enter a trade over a long run, that trade that's being entered, you are profiting 1R. So regardless of win or loss. So this is how we ascertain whether this is an A plus setup or not. So going back to this goal setup, so this is an example of, this is not A plus setup by the way. This setup over here, right? This setup over here is more like a Tuesday Asia sweep setup, right? Tuesday Asia sweep setup with a win rate of 59%, right? It's still decent, but it's not to the extent of A plus setup. So 59%, sometimes I win, sometimes I lose, but in the long run, every time I win, I will secure 2.5R. So I'll let it play out, and I shall not care too much of the results. So at the end of the day, right? At the end of the day, it's all about discipline. It's all about resilience. Drawdowns are part of the game, but the way how you handle a drawdown will determine a good trader versus an average trader. So stay sharp, protect your capital, right? And let the 8 edge play out. We are sticking to our plan and staying in the game. So if you are going through a tough drawdown like me as well, right? Let me know in the comments and how you're managing it, right? Let's stay strong together, and I'll catch you in the next update. Trade safe, guys.